Welcome to Real Estate Investing Abundance, the show for busy, fulfilled professionals like you to learn how to develop financial independence built on solid, passive real estate investments. Now, here is your host, Dr. Alan Lomax.
Hello, enlightened investors. Happy to be back with you again today. I'm your host, Dr. Alan. I know you'll enjoy today's show, and I have a big ask that will only take a moment of your time. Ratings and reviews are the lifeblood of our podcast. To leave a review and a rating, iPhone or other Apple iOS device users, go to Apple Podcasts or iTunes. For all you non-Apple device users, go to podchasers.com. On either site, search for Real Estate Investing Abundance. Once you find us, leave both a review and a rating. Subscriptions are also vital to the show's success, so please be sure to subscribe on your favorite podcast app. It's free to subscribe, and you can unsubscribe at any time. Enlightened investors, happy to be back with you today. I'm your host, Dr. Alan. If this is your first time tuning in, I know you'll find great value in the show. Are you perhaps a busy professional, passionate about the work of your calling, but have come to realize that the hope of developing financial freedom has taken a backseat to priorities of following your passion? If you can identify with this, I've got good news. State Talker Capital is an investment company designed for passionate, fulfilled professionals like you to help you develop financial and time freedom built on solid, passive real estate investments. We have created an enlightened investor circle just for you. Go to our website today and enroll in the Enlightened Investor Circle. There, you'll receive education and support for your passive real estate investing goals, no matter your level of experience. Today, we are going to explore the development of tiny homes, building to net zero, and capitalizing our dreams. Our guest is a land developer and builder who specializes in small, modern, highly efficient homes and communities. He has extensive experience in the structuring of capitalization for development projects with vast experience in capital markets for construction and development. Please join me in welcoming Ryan Andrews. Before we delve into the aspect of small, modern, and tiny net zero homes, Brian, share a memorable experience from your formative years that helped you to be the person you are today.
Yeah, thanks for asking. I'd love to share a little story that comes to mind early in my entrepreneurial career. So I started my career in finance and for a big corporate investment manager, but really always saw myself as an entrepreneur. I always wanted to run my own business, run my own companies. And so it wasn't too long before I felt like, okay, I got to leave this corporate job and suit and tie and get out on my own. So really my first entrepreneurial venture was with a group of friends that had developed an iPhone app that was for file sharing. And this was kind of early in the 2010s. So in the early days of the Dropbox and Box file sharing apps. And so I jumped in with them to basically be their business guy or their finance guy. And we were going to raise venture capital and, grow this big tech company. It ended up being one of the hardest years of my life. It's very hard to raise venture capital and raise money on an idea, but it was a really good experience because of that. I remember the most, or the experience that really typifies that year was really late in December. We'd been raising capital for about 6 months, had brought in a little bit, but we'd basically run out of cash and we couldn't pay our Amazon Web Services bill for the next month to keep our app online and functioning and sharing files. And so we'd been courting a venture capital group that was going to put in over $1 million in the company, which was what we needed. And at the 11th hour, 59th minute, the day before we were going to, execute contracts and come to an agreement with them, they changed the contract and they'd seen our financials. So I think when they got wind of how little cash we had, or I don't know, maybe they felt like the deal had changed, they wanted about twice as much ownership in the company as we'd been originally talking about. And so the three of us entrepreneurs basically had an opportunity to take the deal and just, suck it up and move forward. And, we're desperate, we need it. Or kind of stick to our guns and move forward without the deal. And I felt like we had no leverage at all against them. We had no money, but we did end up walking away from the deal at the last minute. And we went back to our customers, turned our app into being a paid only app after a trial period instead of a free app with like payment for upgrades. And so we tried to generate revenue out of that. And that ultimately floated us for about 4 or 5 months until we could find another investor group. But the key experience there for me was in negotiation and leverage, which is so much of what I do today, whether it be buying land or working with investors or debt partners on large capital deals. A lot of times you might feel like you have no leverage at all, but you can always walk away, and it's better to make no deal than a bad deal. And in hindsight, I'm not sure if that was a good idea to walk away from that deal or not. We probably should have taken it. The company no longer exists, so maybe the capital would have helped at that point in time. But the point being of just the empowerment in a negotiation, which is something I carry with me almost on a daily basis today. So yeah, super formative experience early in my career as an entrepreneur.
Well, certainly an important lesson for a real estate developer who is always in the business of raising capital. A good lesson to learn there, particularly regarding leverage. And it is interesting how you actually, when you thought you had absolutely no leverage at all, you did discover that, in fact, one of the most powerful tools in leverage is actually walking away from a bad deal there. And of course, as you said, you don't know for sure if it was a bad thing to do or a good thing, but we can always ponder those roads, those different roads we've taken, and ruminate over those things without really ever getting anywhere. So, but you moved forward and you didn't stay stuck there. So let's get into the work that you've been doing, because it really is interesting and exciting. Your company, Hiatus Homes, has really pioneered the building of tiny homes in community. It's been a fad for several years in terms of tiny homes, but there's very few who have actually taken the tiny home to expand that to community. And your first project, you developed 22 tiny homes. So walk us through that project. It was in Bend, Oregon, and it's been a successful endeavor. So tell us about that.
Yeah, it was an extraordinary project, what we call the original Hiatus or Hiatus Benham. So as you say, yeah, tiny home became, a big deal, a fad in some sense, but a lot of times they were tiny homes built on trailers, on wheels. And instead of being housing, they were technically, vehicles. And it was really hard to find places to park them and stick them. They were inexpensive to build, but really hard to actually do in reality. And so my partner on the fund, with the company and in our fund here, really he pioneered the development side, and I'm on the finance side, but really had a vision of like, okay, well, let's just take these, get rid of the wheels and put them on foundations. But given modern building code, that's actually impossible, or had been impossible. And so there were minimum sizes for dwelling units, for rooms, widths, heights, and sizes for lots that didn't make sense. And then there were also really big fees you have to pay for the city, regardless of the size of the home, whether it's big or small. And so a 4,000 square foot home or a 400 square foot home, you pay the same building fee to the city, which makes the small home not economical in a lot of instances. And so what was really unique with our first project, the Hiatus Benham, was we were able to utilize a brand new code in the city of Bend, Oregon, called the Cottage Code, that really allowed for this type of development. And the city of Bend, Oregon, where I lived and I've lived for about 10 years, is becoming kind of forward thinking on this topic, really trying to figure out how to manage density in a tasteful way, managing detached density. So, higher density, but single family detached homes, by making them smaller. And so they were open to putting this code through. And my partner actually worked extensively with the city to write this code, this building code, and get it through and push the project. And there were about, probably 10 or 12 individual investors that came into that project. Most of them took a real risk because it was a brand new building code, a brand new product type. There was no comps. We had nothing to point to that there was demand for this. But the investors did extraordinarily well. They earned between 20 and 30% IRRs on that project for a couple year investment. And so, they were all of them came into it because they believed in the theory theory and the philosophy, but then came out of it kind of scratching their heads and saying like, okay, there's some real economics here. And that's an important piece to me as the finance guy, that I think the market should respond and reward good ideas if they really are good ideas. And small, efficient homes are good ideas. They cost less to build. You can go higher density on your land. And so you have more product to sell for a given postage stamp of land. Yeah, those were all, kind of unique aspects that came out of that project.
We'll be right back after a word from our sponsor. As an industry-leading, relationship-focused, design-build construction firm, Mosaic Construction has worked in many different asset classes from multifamily to retail, medical, industrial, and commercial. Mosaic Construction works to execute interior and exterior renovations with their team of trades and project managers. Their experience with value-add improvements has resulted in increased ROI and long-term value of the assets. They work nationally in partnership with local trades to deliver thoughtful, problem-solving construction management solutions to all their clients. For a personal, no-obligation consultation, call Ira Singer, 773-491-3145, or email Ira at mosaicconstruction.net. You can also find Ira on LinkedIn.
Yeah, like you mentioned, the market should reward good ideas, but like you pointed out, it doesn't often. And Bend, Oregon is kind of an exception to national building codes. And I'm sure it took a great deal of effort and energy on the part of your partner to work with the city. I've had some experiences in working with bureaucratic organizations, and they do not move easily. They're pretty inflexible. So kudos to you for accomplishing that. Tell us a little bit more about these houses, their square footage, the amenities, and what has gone into these. I don't know, were these net zero homes, or was this before you actually got into the net zero aspect of that?
Yeah, good question. So by the last one that we built, we did get to net zero. It took us a while to figure it out, to learn how to do it, to work on it, and work with Energy Trust of Oregon to get the right insulation and lighting packages and solar on it. But yeah, so a little bit about the home. So this was our first model, which is a dual loft. It's about a 400 square foot footprint, a little smaller than a 400 square foot footprint. And then it has a patio outside of that little deck. And then it has two lofts. It has a little loft against the bathroom in the back and a little loft above the living room in the front where the bed goes. And so if you include the square footage of the lofts, you get about a 600 square foot unit in livable space. But the thing that all the buyers said when they walked into them was, they'd look around and be like, whoa, we can't even believe this is only, a 400 square foot footprint and 600 square feet of space, because they've been designed really well. We spent a ton of time on our designs. And so they feel and they live a lot bigger than their actual square footage, lists. And so part of that's high ceilings, part of that's efficiency, good use of storage, and then really good placement of the private and community spaces between units. These are not designed out as row houses where they all line up and face the same direction. They're kind of, dropped like little pieces, puzzle pieces across in a patchwork across a 3-acre site. And so, you have some privacy because you need when your home is small, you need some outdoor space that feels a little private. And so there's community space, there's some private space, and you're not necessarily just looking out your window into your neighbor's, other small homes. So they feel very big. And that was a key part of the homes for us. And then working through to that energy efficiency, you never really know till you get a home built and test it, whether it's going to be, you can design it to net zero, but it's hard sometimes to actually get there. So we did win several awards from some of the local home building organizations in Bend around the innovation and efficiencies that we had built into those projects. And then we really folded that efficiency innovation into our brand as a whole, into the Hiatus Homes as a whole. And now everything we build, we really go for a really efficient home. And our buyer really appreciates that. And that's something that will cause them to buy our home over another comparable home. And so that's something that stands out.
Absolutely. You had, when you were talking about the fad of tiny houses, you had mentioned that tiny houses were inexpensive. I have seen some tiny houses that were going for like $400 a square foot. And I asked myself, what is the point? So what are your homes going for in terms of square foot?
So it's interesting. We've had a lot of actually internal debates on that, because the per square foot sale price is always high because you're dealing with small square feet. And even if the dollar price that somebody comes into them at is low, the per square foot price can still be high, 300, 400 or more per foot. And so these homes ranged, I think the first one we sold for like 210,000, which is, half the price of anything else that was available in Bend, Oregon at the time, median home price in the 400s or so at least. And so from a dollar standpoint, it was affordable. If you look at it on a per square foot standpoint, you're like, oh my goodness, this is, some of the most expensive real estate in Bend. But our buyer, when we've really thought a lot about this and talked to our buyer isn't buying square feet. They're intentionally buying less square feet. What they want is a kitchen and a living room and efficiency and cool design and community space. And so they're buying a home at a price, not buying a home at a per square foot basis. And so it really throws off the metrics. And it's important to have real estate agents that are actually selling these and lenders, frankly, that are financing the purchase of these, that understand that, so that, you don't write these off and think like, oh my goodness, this isn't affordable housing. Look at the per square foot price. But when you look at the actual dollar cost, a $200,000 home is, when it's half the median home price in the city, is affordable for a blue collar worker or something. And so that is definitely workforce housing achievable.
Well, in our area, probably our average home prices are going probably close to, I haven't really paid that much attention this last year, but I'm guessing with the inflation that has occurred, probably somewhere around 150, 175 per square foot. Would it be doable in our area to look into tiny houses?
It most likely would, for two reasons. So one, the biggest driver of the per square foot price is actually the land cost. And so if the finished homes are going for, something, has a lower median home price, the land prices underneath that are going to be less. And it's possible labor will be less. We've got a very tight market for construction labor. And then we've seen, just crazy inflation on building material costs. That's more or less universal, I think, around the United States. But yeah, really what you're looking at is land cost, the regulatory burden, as far as like how much are your what's called SDC fees, system development charges, or basically your fees you pay the city to get your building permit. In Bend, Oregon, those fees are $30,000 or more per home. Yeah, which is extraordinary. In other jurisdictions, it might be $5,000 or $2,000. And so it just depends what that is. On that note, we're working with the city of Bend to actually try and scale those SDC fees so that small developers pay less and big developers pay more, or developers of bigger units pay more, not the size of the developer, but the actual unit. And so scaling that up and down makes this possible, because a lot of cities and jurisdictions, they want workforce housing, especially out here on the West Coast in these really high demand regional markets where we're not in the big city, a couple hours outside of it. We're in a great recreational hub. People want to live in Bend, Oregon, but it's got a limit on land, so limit on supply, and then the regulatory environment further limits that. Well, if we can find ways to work with the government to open that up, help them understand what it takes to make projects pencil, then, we can do a lot more. And so it's a really long, nuanced answer to your question of will small home development work in other places? Yeah, you bet it will. And it's mostly a function of land prices. And a median, a small home developed in San Francisco where land is extraordinary might still be, $700,000, but it's still going to be half the median price potentially. And so that's where you got to compare apples to apples instead of just going on a per square foot basis across the board. So yeah, thanks for absorbing a long answer.
Well, thanks for filling us in on that, because that has always just been a point of curiosity for me when looking at it from a square foot perspective there. So looking at it from a unit perspective, I can understand how it does become a feasible prospect there for many people. And for many reasons. There are a lot of people who intentionally want to scale down because of their personal philosophies and what have you, are less consumer driven and more environmentally driven. And there's a lot of reasons.
Quality of life as well is a big one with buyers of our homes.
Yeah.
You get a great quality of life if you have less of a giant home to take care of and you can focus on different things.
Yeah, I mean, absolutely. I mean, you cut your mortgage in half by 50% there. That is going to give you a very, very different quality of life. So yes, very good, good analogies there. Thank you for bringing us up to date on that. You've moved forward in terms of the work that you continue to do there. And like you had just mentioned, all of your homes now are net zero. So just walk us through the next project that you did, which was a 10-home development. And that was from the ground up. It was intentionally net zero homes. They were a little larger homes, 910 square feet with 2 bedrooms and 2 baths. Talk us through that scenario.
Yeah, thanks for asking. So where the birth of that project really came from is we had a lot of people that walked through our original 600 square foot homes and we're like, gosh, we love this. We love the style, the efficiency, the design. But we've got, a kid or it's a married couple or something and they're like, we just need a little bit more space, to be honest. We'd love a garage, a second bedroom, a second bathroom. And so we created a 2-bedroom unit. Yeah, that's about 910 square feet. And then it has a single car garage that's a little bit oversized garage that we like to call a flex space. And so if you include that, it's really a 1,200 square foot livable home. And the garage is fully insulated, can lighting. I mean, it feels like a room in the house that just has a garage door that opens. And so it could definitely be used as an office or a gym or you can park your car in it. So that was kind of the birth of the idea.
We'll be right back after a word from our sponsor.
Would you ever invest all your money in a single stock? Very unlikely. Yet investors are willing to risk $50,000 to $100,000 in a single property in real estate all the time. Avestor is the world's first customizable real estate investment platform. Investors can build their own custom portfolios selecting investments across multiple asset classes such as single-family homes, multifamily, student housing, self-storage, and shopping centers. You can also invest across multiple markets and different time frames. Avestor also enables other real estate entrepreneurs and syndicators to build and use Avestor's infrastructure and cloud platform to create their own customizable real estate funds. To learn more, visit us at avestorinc.com. Avestor, real estate investing made simple.
So you are actually finishing the garage to living standards, and it's making it a 1,200 square foot home. That surprises me. I would have thought you would have left it as a garage and allowed the homeowner to make the upgrades on that.
Yeah, good question. Well, so a couple of the things are the upgrades on it. We went ahead and insulated the floor. So the concrete slab is insulated. And so that helps just with making the room comfortable. We put the can lights in and all into the design. The homeowner can choose whether they want to finish the floor out or not and make it feel like a finished floor or just leave the raw concrete. And so they do have a couple of options there. Another one of their options on the energy efficiency side is electric vehicle charging station integrated in. And we pre-wire the home for that. So it's pre-wired for solar. And then it's pre-wired, what's called roughed in for electric vehicle charging. And so if they have an electric vehicle, they can, basically it's piped straight down from the solar to the garage. They can plug in every night and use it as a garage or a flex space or a combination of both. And so, here in Bend, Oregon, when it's snowy all winter, maybe you use it as extra space in the house because, a little bit extra recreational space or whatever. It's harder to get outside, but, that might change in the summer when, it's nice and warm out.
Well, interesting. Didn't mean to interrupt you there, but I was just curious about that aspect of what went into your decisions in terms of really essentially finishing out the garage. But it sounds like you do have options there, and they're not really totally finished to typical live-in environment, and it's left kind of to the owner to do what they want to do. Just one last question on that: the electric plug-in, do they have to drive into the garage to access that, or can they access that from parking area out front?
Yeah, it can be accessed from the parking area out front. So matter of fact, it's just inside the garage. Yeah. So if you can get close to it or stretch your cord, then that's not a problem at all. Yeah. Good question. Because if you use it as a little bit of a living space, you can't get your car in, at least not all the time.
Yeah, for sure. Well, I had one other question on your loft units. Can you fully stand in the lofts?
You can, yeah. So it's a 7-foot loft. So the first couple of ones that we built with the loft only had a 4.5-foot loft. And that was because we were actually building them, manufacturing them indoors, and then having them shipped on a truck and then backed onto a foundation, lowered, and then, tied down and all. And it was supposed to be, this great, easy, simple and inexpensive way to build the homes, manufacturing them, inside a factory and then bring them over. It ended up not working. It was much easier and better to stick build them on site. So once we started stick building them on site, we were no longer limited by height for the shipping. And so we were able to go to full ceiling heights. At least it's kind of a canted roof. Yeah, you can definitely stand up inside the unit. And matter of fact, that's kind of a good segue to the apartment building that we're working on, which is a micro apartment building. And this is a new project we're working through entitlements with the city of Bend on. And it's one way to think of it is it's like 40 of those little studio tiny homes stacked together into one building. And so those are lofted apartments as well, where you have your living space on the bottom and then your bed on a loft in the back. And those are 7-foot lofts. So the apartments actually have a 15-foot ceiling. So it's amazing, cool, or hopefully going to be a cool open feel with a full-size loft you can stand up in, full-size underneath the loft and everything. And that building is utilizing this brand new code in Oregon that allows for what they call these micro apartment units, which is kind of a studio apartment style unit that only has a kitchenette basically in the unit. And then there's community kitchens for every so many units. So we'll have basically one community kitchen per floor on this project, and that gives people, kind of a unique twist to the living situation. And so we're again taking our, this kind of lofted, efficient model that there's been a lot of demand for and everybody likes, and adapting it not just from a standalone unit to an actual, apartment building that hopefully really does achieve some degree of workforce housing on the cost side for the rentals when that's done. So we've not started construction on that building. We own the land and we're working through entitlements with the City of Bend. But City of Bend is behind this project. They're really excited about it. And it's the first project that utilizes this new building code for this type of apartment model. So yeah, just kind of the evolution of the loft and the model and how that goes.
Oh, it just sounds really exciting and just full of all kinds of hope, really, for workforce housing and for really homelessness, and really starting to address those issues at a real fundamental level there. So I'm just really thrilled to hear what's going on there, and I hope it spreads from Bend to other cities here. Well, let's get into here the development of the capital investment aspect of the businesses that you have been putting together, because that's a significant part of what you are doing there.
Yeah, it is. So as much as we were innovating around the energy efficiency and the design, we've really tried to innovate on the financing structure as well. And so what that meant was, traditionally, with real estate developments, you set up what a lot of times gets called a JV or a joint venture. It's basically a single purpose entity that investors might come into, and they put some capital in, they become an investor or an owner in that LLC that owns or develops the property. And then when that project is over, it's sold, they get their money back, and they can make a new investment decision. We did that for our first couple of projects, and I've done that historically with a lot of development projects. That was kind of where my background came from, was both a combination of setting up and managing investment funds and setting up and managing these individual joint ventures, and then basically acting as the CFO on these development projects. And when we sat down this last summer in 2020 to figure out, okay, how are we going to capitalize, our next series of projects and really grow this brand to not just be one project at a time, to expand to multiple projects, first here in Central Oregon, then across the state of Oregon, then across hopefully what we call the Mountain West, where we just think there's going to be a ton of demand for our building product. And so we needed a financing structure that could scale with that as well. And so we launched this fund called the Hiatus Capital Fund. And basically investors buy into it. It's what's called an evergreen fund. So they buy in. The fund is meant to last in perpetuity. So basically, as long as we feel like there's a good business model here, the fund will exist. So investors buy in, they own a slice of the fund, and then the fund actually acquires the land, goes through the development, pays the engineers, pays the general contractors, and everything to develop the projects. And then what we try to do is we always try and buy our land and do our what's called our horizontal development, which is all of our engineering, our designs, and then all of our streets and curbs and utilities. We try and do all that with cash out of the fund. So investors put money in the fund, then we just pay cash for that. So it's all equity in the project. And that creates a really unique situation where if there's a downturn in the market, and development, ground up development or land development, which is historically very boom and bust and high risk, we don't have any leverage on our land. So we can always just take a pause and hold it. Nobody's going to foreclose on us. Nobody's going to take our land away. We can go back to our investors and say, let's just wait and let's see what the market does over the next year or two. We can just, we can always just hold our land and, pay our property taxes and insurance on the dirt, which is, just minimal cost really to hold it. And so then once we get through that horizontal construction piece and we have finished lots that are usually replatted as a subdivision or sliced into small lots, now we know we're pretty close to completing a project. And so then we go out and we take debt to do our construction from there. And so we actually get a third party, usually a private lender, to come in, lend us money to go vertical and do the 2x4s, foundation to finishes, and then sell the homes. And then when we sell the homes out on a project, the homes or the apartment building or whatever the project is, we actually, we pay off the construction loan. And then the money that comes back, we take the profits and we pay the profits back out to our investors that are part of the fund. And then we keep their original investment and put it into the next project. And so through that, our investors get exposure to all the projects that we're doing, not just one at a time, but they get exposure across the whole, basically, Hiatus Homes portfolio, plus all the projects that we'll do in the future. And it works a little bit like a stock that, an investor buys into early and then the stock price goes up a little bit over time. And investors that buy in later buy in at a higher stock price. Well, the fund basically reprices a little bit as we create value in the underlying land and the underlying projects. And so that investors come in, they can basically just ride the Hiatus Homes wave over the next several years as we, take on new projects and bigger projects. They get, they might get an annual dividend, call it a dividend, once a year, every other year, or, sometimes twice a year. It's whenever we have projects liquidate, they'll get their profits out from that project. And then, we'll move forward to the next one, at least until there's not an opportunity to do so anymore. So we wanted to create a fund structure that really, was a fit for our efficiency and our building model and our growth that we saw in this plan.
Enlightened investors, will be right back after this important announcement. I have a big ask that will only take a moment of your time. Ratings and reviews are the lifeblood of our podcast. So to leave a review, iPhone or other Apple iOS device users, go to Apple Podcasts or iTunes. For all you non-Apple device users, go to podchasers.com. On either platform, search for Real Estate Investing Abundance. Once found, please leave a review and a rating. Subscriptions are also vital to our show's success, so please be sure to subscribe on your favorite podcast app. It is free to subscribe, and you can unsubscribe at any time.
Well, certainly spreading the investment over several projects is going to reduce the risk. I wonder, does it reduce the return on investment?
Yeah, good question. So it depends on how you look at it. So on an ROI standpoint, if you're looking at each individual project, we're targeting, we quote a broad range to investors of 15 to 25%. So if we kind of pick our number in the middle, it's like, okay, we're trying to generate 20% annualized returns. Those will come with, profit distributions periodically. But if we have, just one project in the portfolio and it pays off, investors get a lot of profits back. If we have 10 projects in the portfolio, when one pays off, they only get a little profits back, and then they have to wait for the next one and get a little profits back. So it doesn't impact ROI per se, in that we look at each project individually to hit our ROI metrics, like it has to meet our threshold. When you line up your IRR returns, which is very timing sensitive, those cash flows will vary some, and that investors write one check in and then they might get, one small check back a year and a half from now, and then a big check 2 years from now. And, it'll vary on that. And so at the end of the day, when we do our IRR calculation, we still want to be, as close to 20 as we can, given our overall cash flows. But it'll kind of depend on the size of the fund as to the impact of each project on the overall returns of the fund. So hopefully I'm explaining just kind of the inner workings and the mechanics of that. Okay.
So you still are providing an IRR, an internal rate of return. That, I think, from my understanding, is going to vary from what you would expect from a REIT, a real estate investment trust. That's not what you're doing, if I understand that correctly. Is that right?
Doing a REIT?
Yeah.
Correct. Yeah. This is not structured as a REIT right now. It's an LLC. It's a Delaware LLC that investors own units of. Now, we could make a REIT election later within the next couple of years, which by the time we really generate revenue after the liquidation of our first project, which is going to take 2 years or so, we might do that. There's some great advantages, tax advantages to REIT income, but it's not a REIT in the sense of it's not generating monthly or necessarily even annual income. It'll generate returns basically as each project liquidates. There will be a big return, and then there's nothing till the next project liquidates. So a little bit different than a typical REIT, although there are development REITs, and REIT is just it's just a tax denotation that throws those earnings into a little bit different tax bucket. That's really advantageous. So we'll see. We might be able to get there.
Well, Ryan, not only has your company developed over the last several years, and it has done so impressively, you as a person have gone through interpersonal changes due to your work in this. And as the company has developed, you have developed. Tell us about your personal journey.
Yeah, thank you. Good question. Yeah, certainly, we're all growing and entrepreneurship is a great journey in and of itself. I'm also a dad. I have 3 young daughters. And so I clock out of my day job, so to speak, working on real estate projects and, pick them up from school and play a lot. So my girls are 7, 4, and 2. So I'm in a busy stage of being a dad, being an entrepreneur. And then you live in Bend, Oregon, with all the recreation activities around here, from skiing to biking to climbing, it's an important piece to try and stay developing personally like that. One of the areas I've grown a lot is just in partnerships. And so I don't do anything alone. Everything I do is always in partnership with other people that bring great expertise to the table. And then I'll bring my expertise to the table. And, it's certainly bitten me sometimes. I've made some bad partnership decisions, but I've also made a lot of really good partnership decisions. And so I have a great partner in the Hiatus Homes and the Hiatus Capital Fund. I've got partners in some of the other funds that I manage. I manage a fund called the Recession Resistant Fund under a different brand called Ariel Investments. And so I've got a great partner there that's local here to Bend, Oregon also. And then on the individual development projects that I've worked on and I'm still working on, I've got other partners in there. And so picking the people that you work with has just been a key learning. Early in my entrepreneurial career, I was so desperate to be an entrepreneur that I was willing to partner with anybody, just like, you have a pulse, you have an idea, let's be partners. And then I realized business partnerships are like marriages, and you better really understand who you're getting in partnership with and how they act during stress and what that feels like. And so as I grew, I still always partner with other people, but I'm much more careful about who I end up with. And a lot of times now I, at least have the luxury of being like, okay, let's spend some time together. Let's do a project as consultants or practice, or, I'll be an advisor for you or you an advisor for me on a project. Let's spend a year or two working together, working through some things before we, jump into a legal partnership together. And so, that's an area that I've grown in a ton, because as much as we think we do business with homes and things, we do business with humans. And so that's the human element is what matters, just a tremendous amount. So yeah, huge area of growth for me over the last several years.
Well, Ryan, I have one last question before we go into that. Share with our viewers and listeners how they can connect with you and find out more about the work you're doing and the investment opportunities that you have to offer people.
Sure. Yeah, I would love to. So you can find us, at least the Hiatus Homes brand, on the web at hiatushomes.com. Hiatus is spelled Hiatus. So hiatushomes.com. We do have a little link in there for investors, and the fund is open quarterly for new investments. So our next closing date on the fund for new investors is July 1st. Happy to share kind of pitch decks or high level information on that for folks that connect with our, basically like our product and our value proposition, small, efficient homes. And the fund is really, aiming to do well financially. It's not a charity. It's not a nonprofit. This is a good idea that the market is rewarding, and we're able to do it efficiently and hopefully low cost. And so generate and pass those returns through our investors. And so, investors or anybody interested in our homes or our projects can find us at hiatushomes.com.
So viewers and listeners, that's hiatushomes.com. And I encourage you to get in touch with Ryan to learn more about this fascinating aspect of real estate development. I think it is the wave of the future. Ryan, the last question I have for you is, imagine you have come to the end of your life, and as you lay on your deathbed, what will you look back on with your greatest joy and sense of fulfillment?
Well, I think there's probably a reason. Well, I guess I want to say two things. So, there's probably a reason we all think to family and relationships in that instance, is that really is, what's most important. And I spend a ton of time investing in my children, my family, even my folks, and also that's a big piece of it. But my career is really important to me also, and what we're doing, and I want to feel good about it. And, I think of myself as a builder, somebody that builds things that are long lasting and durable, maybe even beyond my own life. And so, I would love to have a legacy in addition to, my family and my relationships, to buildings and places that people gather and experience in cities and towns and communities, and that are great for them, that, far outlast me. And so, there is a piece of that beyond just the human relationship aspect that I look at.
Wonderful goals, Ryan, and you're well on that path. Thank you so much for being on the show today.
You're welcome. Thank you.
Thank you for tuning in to Real Estate Investing Abundance, brought to you by Steve Talker Capital, a company working for passionate professionals like you to develop financial independence built on solid, passive real estate investments. As part of our efforts to make the world a better place, Steve Talker Capital contributes to activities and organizations committed to better understand the equine. These endeavors attempt to enhance the human treatment of horses worldwide. Steve Talker Capital, working for a world where all creatures, great and small, flourish abundantly. For resources to develop your financial independence, connect with us at stevetalker.com.